Happy Friday, folks. I'm Will Bridges from your team here at Trade House Funds, and we've got an interesting show for you today. I'm going to go through the economic calendar. We're going to talk about pairs that are going to move big this week and new outlook on the Japanese yen. It is looking like, really the story could be changing there. And I want to show you guys something. I like to be upfront with people and make sure that I'm transparent. I'm a real trader too, and I am capable of mistakes. So I'm going to show you guys where I'm at with my trading challenge. It is interesting to say the least, and I've got some insight you're going to want. If you ever want to trade, a prop account, then you need to understand that there are rules. And as far as it goes, I'm going to show you guys how I broke one that I really wasn't anticipating. But we're going to get to that here. In this session, I want to make sure everybody understands everything will be here for, educational purposes only. We're going to look at some charts. We're going to have some trade ideas here today. I'm going to find some fast movers for you guys. And so what I think might be some of the biggest opportunities of the entire year. And January is really kickoff time, and it really seems to be that way. We're getting a big movement in a lot of different places that's already started. But there is no such thing as a guaranteed trade. You have to risk it to get the biscuit. So trade with a stop loss, people, and pay attention to the rules. I'm going to teach you guys a little bit more about this today. But let's go ahead and get over to the economic calendar. I want to talk about what actually happened in the real world for this past week. And this morning, we had an incredible non-farm payroll announcement that happened this morning. Lots of other details throughout the week. So let's start this thing off from the top. And China, we had better than anticipated manufacturing PMIs, which basically means they're making more stuff. They're shipping more things to other people. They are an export economy. So what that tells me is that between that and the Suez being blocked, then oil is going to be pretty bullish. And that's been showing on the chart. You guys should already be seeing that. And I think it can go a heck of a lot higher. Especially if the American economy continues to perform like it has been, and China continues to, seemingly need to stimulate, which is an interesting development to watch, and really could be one of the bigger developments in the world for you to pay attention to over the course of the next few months. That said, manufacturing numbers in the USA still kind of soft. Prices actually are really what came in softer than anticipated. That's what this number is here. So they're paying less and less to manufacture things, which really kind of slows down inflation, slows down the ability to be able to hold rates higher. So that might have been the short-term weakness that we saw in the USD earlier in the week. This cakes in service, I'm not sure how to pronounce that, I apologize, Chinese services PMI, okay, came in better than anticipated. So banking there is doing better than they expected, which means that they're lending more, there's more money creation. Really could mean a lot of different things for the global economy, but that's going to be another bullish dollar signal. Okay, so if they're creating more money in yuan, Chinese versus yuan, we do a heck of a lot of import-export with China from the USA. So that is a big one to pay attention to. And that's also kind of a canary in the coal mine for what's coming out next week. And I'll talk about that here in just a moment once we get done talking about what's happening already. Otherwise, FOMC meeting minutes came out. They postured strong. Hey, the Fed's going to hold rates longer than you think they will, because the market's been pricing in 75 basis points for next year. And, that just, this year, not next year, this year, now this year, 2024. But that's looking like it could just not occur. I mean, especially when we see job reports numbers that are as high as what we're looking at here at 216. That's way better than forecast and way better than the prior. Okay, so that means that the American economy is growing and growing faster than it was a month ago, even though the rates are high. So interesting how that works. Not really sure where it's coming from. A lot of it could be from government spending that is included in GDP and growth numbers and all that kind of stuff. So obviously government employees are people too. So that being said, Europe, lower than expected inflation could mean weakness. I think the Euro USD might be one of the hottest pairs to take a look at. Obviously going to be tons of volume. It's the most heavily traded instrument in the history of trading instruments. So that being said, that really could be a big down move coming on the Euro USD, which really would just be bull dollar is really what that might look like. Everything is relative. Let's go ahead and look at next week really before we move on, because it is Friday and I'm saying, there's lots to be excited about from a chart perspective. I am bullish on oil, and right now very focused on, maybe going short on the euro, maybe a little bit more short on the Japanese yen. And there's big opportunities in other places. If you want to look at, since China is deflationary, and actually let's talk about that a little bit more in detail, and I'll show you guys what I mean by that. But let's go to next week. And I did just realize that I did go through the first week of the month. Oh, no, JK, this is the right place. Okay, so next week we've got, man, it's been a long morning, to put it lightly. You got to love the big announcements that happen. But the Swiss, they're looking at deflation, but not as much as they had been. So that is an improvement there. Okay, that might actually be bearish for gold. Okay, Tokyo, core CPI. That means, this is inflation in Japan, just about 2%. The target is 2%. So what do you guys think? What do you think the odds are that they raise rates for the first time in 7 years all of a sudden? I don't think so. It seems like the market's starting to agree with me. Really, the hype brought it 900 to 1,000 pips on most crosses. So the JPY might be a heck of a position at this point in time. And since I'm kind of expecting, weakness on both of these pairs, the Swiss and the JPY, we're kind of back into risk on territory because, well, the economies are performing and China's about to stimulate. So that being said, I mean, I'm very excited about, maybe the Nikkei, and I think also the HK50. So if you are into trading indices, then I think both of those might be pretty bullish, and I think a great place for you to look. Because if Japan doesn't raise rates like they were expected to, we might see a little bit of a boost there in the Nikkei. And, if the Chinese are expected to, well, they print money because they can, because they're deflating right now. Why not inflate a little bit while you're deflating? That's also what the expectation is when you look at new loans here. They're creating a heck of a lot more money. That's a lot. Okay, so let's click on this here. Okay, so if they want to ramp this number up, okay, obviously that's going to have a big effect on the Chinese stock market and Hong Kong, and that's what the HK50 is. And if they decide not to pump, the Nikkei will go up, okay? Just in my opinion, okay, there's no gospel in the world, but I'm excited about those two. Otherwise, inflation in the USA expected to go up. Okay, so up. That means that they're going to hold for longer than people expected. More validation for the Fed. Everything that they said from the meeting minutes on Wednesday seems to be playing out to the Fed's favor to be able to hold rates higher for longer, which is going to be bearish for commodities. So gold may come down. Oil, I don't think so. Mostly because of, well, what's happening in the Suez and, well, let's say the economies are pumping. If China's exporting more, they're using more oil, especially if they have to go around Africa instead of cutting through the Suez. So that could be a development to pay big attention to. And I think oil could go to incredibly high prices if this sort of thing continues. And obviously the USD, could ride with that because, well, the US is also the largest producer of oil in the world by a lot. Okay, so all those things said, let's get over to the charts and let's talk about, I think, some of the good ones to look at. Looks like GDP in the UK is expected to be positive, okay, which basically means they might hold for longer. They're testing the resolve of the Bank of England over there. But, really, I'm anticipating the biggest driver, for most things to be the dollar as usual, and what's happening in China. Those are the two largest economies on earth, and the GBP could be heavily affected here. So I'm going to go over to the charts and let's get over to the fun part here, trading analysis. And here's the Euro USD. I've already got a lot of this up. I've got smart analytics running, and what this does is it actually scans the whole chart for all of the Fibonacci's, and I'm going to delete the stuff that I've got manually drawn here that's behind it. But basically it just draws a lot of lines for you. It finds every Fibonacci for you. And right now we're at a heavy level. Okay, all time. This is a heavy level that we're sitting at right now at 109.5. 110 is obviously significant from a psychological standpoint, if nothing else. So that said, it wouldn't be crazy for us to test these numbers down over here, okay, much lower, because we have been, well, bearish for 15 years. Okay, we've got PMIs in the mid 40s pretty much across the board in Europe, which basically means the economies are shrinking. Okay. Not good. There's a war in Ukraine. That's still happening. That's still a thing. Okay. It's still a thing. And really, I think, I'm not sure when specifically. I might want to look into when Ukraine might have to start paying taxes to be part of the EU. And that might actually change things. That might be where this thing finally turns around. But I don't think that it's out of the question for us to test parity again. And I think all the way down here, just to zoom in, we've got some good levels here. And we'll just go into a lower time frame. Let's just do that. The cool thing is the Smart Analytics is going to do a lot of the work for me, so I don't have to do it. But even if we consolidate in this zone, if we just come to test this, 382, that's at 108. Okay, that's 150 pips away. In my opinion, this is as good a time as any to try to test something like that, and especially when we've got bullish news on the dollar and bearish news on the euro. So this is kind of a strong versus weak argument right now. We've been sideways for the last, year, longer, and it's been down most of the time for the last 15 years. So if I'm a bank with billions of dollars and I'm willing to sit in this for longer than just a little bit of wave, I might want to come test these missed targets down here, all the way down at 101.6. Okay, so let's keep on moving here. I think the Euro USD is going to be a big opportunity. Pound USD, not as much. Euro pound could be a good opportunity because I think the pound might see a little bit of resurgence with the good news coming, that we've got, and it's already happening. You guys see what's going on here? Okay, this is very much, this is the 1 week chart that I'm on here for the Euro pound, and it is moving down with, a little bit of vigor. It's moving down. And that just means that the pound is getting stronger. So I've got all these lines here. Where could it test? Obviously much lower. You guys see all this. These prices down here at the low 80s, this thing doesn't usually move more than 20 or 30 pips a day. So for it to be getting this kind of momentum right now is pretty exciting for this pair. And really, if you're going to get out, test anywhere, probably down here in the, 100 pips away, 85 might be a decent place to test the water. Or, there's a lot of levels to consider here. But really, I would want to be paying attention. Let's get a little bit of smart support on here. We'll zoom in. Okay, and really, the mid 84s, 84.50 is probably a cool price to try to take profit because it looks like a few $1 billion worth of euros, dollars were exchanged at that price. So, there's a lot of good turnarounds here, but this is making lower lows, and it does, well, if we break through this level here at 84.5, then this thing could come all the way down to the low 80s, and, it's been sideways for, most of my trading career. Okay, so almost a decade here, and there's no reason why it shouldn't continue going sideways. We're getting lower highs on the top. Okay, so fun one to watch here. I think that one could be interesting to watch it develop, and really kind of depends on what happens in the UK more than anything else. But let's go ahead and take a look at oil. Obviously, oil is going to be a big one, and oil's been hot. Okay, it does look like we're at somewhat of a low price right now. Well, at least that's what the market thought the last time it got here, because the last time the market was at this price, just over here, we'll go ahead and click that. That was in July. Okay, in July, we were in the low 70s, okay, and it made a strong move upward, and we went all the way to the low 90s, okay, so that's a 20% rip. That can happen very quickly, and even if we only go to 80, that's still $7 above where we are right now, and I think that is where the next stop is, especially if geopolitical risk continues to be what it is. Okay, so I don't get to dictate what happens in the world, I just get to trade it, and that's really what we're here to talk about, so I don't want to get too deep in the weeds with that kind of stuff. Let's go over to gold. Okay, XAUUSD. And gold, has been very bullish. Okay, and I've been bullish on it. Okay, there's still reason to be bullish on gold. And a lot of that could be because the Chinese are looking to inflate their money. Okay, so if the Chinese do that, then gold is likely to go up. But we might push sideways here just based on the strength that the dollar is living in. So I may not be ready to enter as a buyer again right here. Maybe you are. I don't know. Let's go ahead and let's get down to the day chart. Okay, because we're getting a big doji candle. Look at that thing. Okay, this is indecision. We're getting strength in the U.S. economy. So if anything, my opinion, okay, short run, I think we come down here and we test the 2,000 level again. Maybe just get a lick underneath there because there's some missed targets here. There's some people that forgot to buy at this price down here, meaning that they're still holding a loser. And the American economy is performing. The U.S. dollar is getting more expensive, which means, hey, this could push sideways, and I think that this is the time for it to do it. We're getting lower and lower highs over the course of at least the 4-hour time frame, which, is usually a big indicator for me. Right now could be go time for a little bit short. Okay, so let's keep on moving here. I'm going to pull up the Nikkei, and actually I don't have that one in this platform. Let's go ahead and reload. Well, I don't have as much data And I want to make sure I give you guys an accurate look at stuff. But if you're looking at the Nikkei here, okay, if you bought any time in the last 15 years and held on to it long enough, then you made money. And that's pretty much how this worked out. So that's still the trend. You know, if you guys look at this, I don't need to draw a line for anyone to realize this is an uptrend. But it does look like we're in breakout territory. And if everybody just found out that all this scare about raising interest rates isn't going to happen, I say welcome to Boomtown. This thing might go up. Okay, so that's really what I'm expecting on the Nikkei. And while we're here, I might as well just go ahead and pull up the HK50. This is the Hong Kong index here that I want to show you guys. This is another one that I will be bullish on. And I think primarily because I think the Chinese are going to have to print. And if they print, then the HK50 is likely to finally get, you know, a little push upward. Okay, we're also at a low price here. If we want to draw a Fibonacci on here or whatever, we could do that. But the reality of the situation is this thing is low. Okay, we are at the 236 right now. It wouldn't be crazy for us to see 20,000. Okay, 20,000 has happened many times. It's down over a third to get to where we are right now. Okay, so long-term investment has to recover in Hong Kong or it might go away. So I think that they're going to take the signal that the economy is deflating and do something about it. At least eventually, all this big downturn here is them waiting to do it. Okay, so there's a lot of reasons why they could be doing that. Who knows? But the reality is we're getting at pretty low levels. And really, if they don't let this market come up a little bit with some stimulus, then, you know, let's just say how many people are going to want to be in it at 13,000, you know, so it can't continue to slide like this. And I do expect, well, it can do anything. It can do anything, but my money's on sideways, and that's where I will be placing my bets on this one. But let's keep on moving here. I've got maybe one or two more I want to show you guys. I think the Euro JPY, and really, you know, there could be a big movement in a lot of places. The Euro JPY could be an interesting one. I think also the USD JPY. And USD JPY has been taking a little bit of a break today. A lot of people sold that news. You guys see that. But overall, this thing is an uptrend. As I zoom out here, you guys can see the platform went ahead and found some upward waves, and we hit the golden ratio down here at the 618. So, you know, we still haven't hit our extension up here above 150. If they're not raising rates in Japan and everything is going smooth in USA, I think we go up. But, you know, there's no gospel in the world. There is obviously multiple wars happening right now. Okay, so if anything heats up there, obviously things can change. That's why you trade with a stop loss. But right now it looks like a great opportunity to start buying on this USD JPY, especially with the higher highs that we're getting on the 4-hour chart. And really it'd be kind of surprising to see we've got a couple higher lows here as well. So I think it might be getting close to go time. I think down here at 143 might actually be where this thing might be the most primed, because right now you're in kind of catching a falling and knife territory. And hey, there could be still opportunity to test this W, you know, if you guys are into that move. But I think that's really all I want to show here for today. I don't want to get you guys too bogged down and get you guys too wide open. I do want to show you guys my dashboard, and I did have to, Jeff is going to beat me. He is on his way, and this is my dashboard. And you guys will notice I never hit the red line. Okay, so I learned about a rule today, and I want to share that with you guys. I don't want to, you know, make a mistake and hide from everybody and say, oh man, I'm perfect, you know, because I did finish. I'm up in this account. I breached this account and I'm up somehow. Okay, so you're going to want to know how this works. Okay, so since I'm up in this account, okay, doesn't matter. Okay, the part that I wasn't paying attention to and that I really didn't realize was a hard breach, because that's what I did, is this daily loss limit. And what happened here is you'll see that my equity didn't really change. Okay, I was relatively flat here for, I don't know, most of the holiday season while I was really, you know, not doing a whole lot. I was kind of just adding positions at night, hanging out with my family. It was Christmas, you know, New Year's, all that stuff. So, I mean, I wasn't really active in this period of time. I was just closing out profits when they happened. So I kept, you know, building up my balance and driving up my daily loss limit. And I didn't realize that was a hard breach. Honestly, didn't know that. Thought it was a soft thing. And really, I was starting to think that I didn't even really need to worry about hitting it. But apparently, you know, as I drove up my balance, okay, by closing off, just peeling off profits, because I'm a position trader, and I'll take multiple entries and scalp those off. And, you know, obviously, you know, my win rate was still positive, even with that. It closed out 48 positions that day. Okay, so I was working it. I really wanted to beat Jeff. And it does seem like Jeff is going to beat me in the challenge pretty soon in the next couple of days. So, but that said, I'm not out of the game. I'm running this back. But my win rate was positive. You know, profit factors were good. Everything was good. I made money. I was up almost $900 even with the breach. So that being said, I wanted to make sure you guys learned about this. You know, I learned a tough lesson, you know, because I was obviously very aggressive, and you guys see how close I got to this green line. I wanted to beat Jeff days ago, and you know, really I should be trading against myself, and that's something that I should be paying attention to as well. You know, I'm not perfect, but I do want to make sure that I share with you guys. And I got a freshie today. I did get it. I did upgrade today. Not upgrade, I guess, or load it back. You know, we're going to beat this account, and I know this rule now, so I'm not going to go back and do the same thing. I am going to learn from my mistake, and you should do the same. I do want to make sure that, hey, I keep it real with you guys. You know, you got to risk it to get the biscuit, people. There's no such thing as instant success. I wanted it for myself. I'm competitive. I wanted to do this for you guys. I want you guys to know how easy it is to win, because honestly, I still think it is quite easy to win as long as you focus on you and really, you know, don't leave yourself exposed. You got to understand all the rules. That's something that I made a mistake. That's on me. But now if you've watched this and you know that, then it's on you. So we've got an exciting week coming up here. Hopefully you guys got some good trade ideas here. I'm going to be executing a bunch of them myself. So you'll see how the results work out over the course of the next week. I'll be sharing that in the Discord, newsletters, all that stuff. If you haven't signed up for the newsletter, you should do that on the bottom of our website on tradehousefunds.com, because I'll be putting out bullish, bearish for all the major news for the whole world every week. And, you know, by all means, you know, I'd love to hear your feedback. Let me know what you think in the comments. You guys have a wonderful weekend. Happy trading. Be good or be good at it.